Correction, pullback, and retracement. Are they all the same thing and how to trade them? Hello traders, my name is Angie and today I'm going to tell you the difference between these financial terms and show you how to identify and trade them. Please make sure that you are subscribed to our YouTube channel, give this video a thumbs up, and ring on the notifications bell. Likewise, don't miss the action on our social networks. Let's get started. Technically speaking, a correction, retracement, and pullback are often referred to the same thing when the price moves in the opposite direction of the main trend. And this is a normal occurrence on the financial market when the price is either too high to attract more buyers and the market is overheated and the asset is overbought, or likewise when the price is too low to attract more sellers and the asset is oversold. By the way, to identify these levels, you can use a technical analysis tool called an oscillator. Check out this video on how to choose the right oscillator to trade. So what's the difference? Well, if we are speaking about a pullback, then this is generally referring to the stock market when the price reaches a new high or after a strong advance to the upside. The price pulls back for a short period of time, usually no more than a few trading sessions before the uptrend continues. Traders and investors can use a pullback to get in on a profitable price. Pullbacks are often the result of traders collecting their profits after a strong move. Let's take a look at this example with Starbucks on Monday, November the 9th of 2020. It's holiday season, and on the previous Friday, November the 6th, Starbucks launched their line of seasonal favorite drinks along with new holiday cups, food items, and gifts. Clearly, this was a positive factor for Starbucks and its business, and on Monday, the price opened up with a gap. The price reached actually August 2019 resistance. Traders quickly collected their profit, and then we saw a pullback for 2 sessions before the price resumed its bullish movement. A retracement is very similar to a pullback, which is a short-term change in the main trend direction. We can observe a retracement on an up or a downtrend. In this example on the AUD CAD, we're looking at the 4-hour time frame. And in this example, while the price is continually creating lower lows and lower highs, it has moments where it gravitates, in our case, towards the level of resistance before continuing its move down. Remember, during a downtrend, you want to trade down from resistance, and during an uptrend, you want to trade up from support. Here is a special video that is dedicated to this trading technique. Check it out. Now, my friends, if the price breaks a level of support or resistance, for example, your trend line, then what we are observing is a correction. The difference with a correction is that there is usually a change in price of at least 10% or more, and a correction can last for a few days to several weeks or even months. During correction phases, what we can use is a fabulous tool called Fibonacci Retracement. Let me go ahead and switch this to the daily chart and take my Fibonacci levels. On a downtrend, you would connect the Fibonacci levels from the peak, the maximum, to the low, to the minimum. And what we have now is we have identified levels of support and resistance where the price is likely to reach. What we are observing now is that the levels that we need to pay attention to is 23.6, 38.2, 50%, and 61.8. The price can reach 23.6 and then start to continue to move back down. If the price breaks above the 23.6% level, what we can expect is that the price will reach 38.2. At this level, the price can start moving back down or it can advance up. If it breaks this level, it can reach 50%. But what you have to remember is that if the price reaches and breaks 61.8%, then the previous trend has ended and a new trend has begun. My friends, I do have another special video where I teach you how to master the Fibonacci tools. Check it out. And lastly, dear traders, I do want to show you a way that you can spot corrections and retracements and reversals. And this is by using candlesticks and price patterns on the Japanese candlestick chart. Here on the same pair, AUD CAD, we're looking at the 4-hour time frame. What we can see right here is a piercing line pattern. The green candle opened down with a gap. and closed above 50% mark of the previous red candle. So this is like a hint that a reversal or a correction or retracement is approaching. And especially for you, my friends, I do have another special video where I show you and explain some of the top reversal patterns. Enjoy, my friends. Dear traders, thank you so much for tuning in, and I do hope that you now understand the difference between a pullback, a correction, and a retracement. And I hope that you will use this knowledge for profitable trading. Don't forget to subscribe to our YouTube channel. If you enjoyed my lesson, please give me a thumbs up and ring on the notifications bell. And check out our social networks. My name is Angie. Thanks for tuning in, and I will see you next time. Bye bye.